Good afternoon, traders. It is Sunday, August 20th. Just want to do a quick review on the previous week in gold and show you what my best trade setups were on the day and what my process is in defining what my best trade setups are and how I can find them in real time and what my thought process is before and after each trade. So when you look at the 1 hour time frame on gold and you have a 2 week view from the first and second week of August, you can see that we are currently in a downtrend. So with last week being in a downtrend, I am expecting price to continue in that trend until price shows me something otherwise. I log onto the screen at 8 a.m. every day, Monday through Friday, when I trade gold. And during this timing window from 8 a.m. to 9:30, I'm merely observing price and tape reading and seeing where I can enter in the market, where can I have an asymmetrical risk reward trade entry. So as you can see, Asia and London, these lows are around the 1910 area. Right at NY Forex open, we break that level and close and then retest that 1910 area again. So we have a small downtrend. And then right at NYSE open, we consolidate at the low of the day, making a W formation in the 1 minute time frame, as you can see right here, leading us to our first entry on gold right at the start of the 3rd hour. This bullish movement, we have a 20 EMA crossing, confirming our entry. We enter in at the close of the candle, allowing for a 1 bar stop, 20 pips. And on Mondays, I usually set my take profits to 25 pips. As the week progresses and we have a better idea on how price is behaving for the week, I will set larger take profits. Sometimes gold can give you 100 plus pips, but I usually stick to 25 to 50 pips. That is to establish more consistency and being able to extract money from the market every single day. And these setups happen again every single day. And my objective is to increase size on my positions and secure the same amount of pips over time. If you were unable to enter in this trade, there was a first bounce entry right at the bullish close after we have a small retracement, allowing for a tighter stop loss, a 1 bar stop, and our target of 25 pips since we didn't reach this level of structure right here on the previous entry. So we note our closing price on Monday, 1907. We closed as a red day. So the odds are a little bit higher in our favor that we may see Tuesday be a red day as well. It's no guarantee, but this is our thesis moving into the day. Asia has about a 30 pip range. Oh, yeah, tight range in Asia. Creeping trend coming down in London. And as we look in our timing window, we're just creeping to the low of the day until we have a blow off move that pins to make a new low of the day and support formed around major round numbers 1900. And one other thing I want to hammer in is that when we're scalping on the daily on gold, there's only 2 setups that we're looking for. It's either going to be a pump and dump or a dump and pump. So as we can see, price dumps down into the 9:30 timing window, right back at that level of support. We find our universal entry criteria met when we have a bullish candle close above the 20 EMA. And the 20 EMA just serves as another confluence of the direction where price may be going. Again, we have a 1 bar stop for 20 pips, and we're targeting 25 pips, but if you put your take profit to the structure, you can net about 30 pips. Eventually, Price does blow off till the end of the session to make a new high. And this purple line right here is the previous week's low. Price closes at around 1900, and Tuesday was indeed a red day as well. This blue line right here is Monday's low, our opening range. Here, the new low of the day for Tuesday is going to be our initial balance going into Wednesday. And this is going to be our previous day's high. Moving into Wednesday, Tuesday closes a red day as well. Wednesday may close as a red day as well, too. Let's see how price behaves. We have a bullish trend coming into Asia. Set a new high of the day in the gap time. London sets a peak formation high. Another high in the gap time, so we're making higher highs and higher lows. Then in our 8 a.m. Forex window, we have a break in structure. We make a new low of the day, and we consolidate below this 1902 level, which is Monday's low. As you can see, at 9:30 a.m., we start pumping up into the high of the session. However, we do not make it past the current high of the day. And we see a little breadcrumb of where we may enter in the market with this engulfing candle, aka the death candle. Now, we enter in on the market when we have a pin right at this level of structure. Now, this was something that I struggled with earlier on, shorting the market while it's going up. But once you have your thesis in place that when price does retrace, if and when it does retrace to this level, that I can have my stop loss above the high of the day for immediate blow off move that'll go into my direction. And as you see, on Wednesdays, as the week progresses and we have a better idea of where price may be going, we can set our take profits for a larger amount and netting us 50 pips right around the structure. Consequently, if traders took partials and let the runners run, you can see this move blow off for another, I don't know, let's see. Oh wow. That was a pretty sizable move. So congratulations to anybody who were able to capitalize on this move. Moving on, Wednesday closed as a red day as well. So we're looking for this trend to continue. We close below Tuesday's low. Asia puts in a peak formation low from yesterday's low. London puts a peak formation high from Tuesday's low. And we see that price pumps up into New York Forex Open, all the way up into NYSE. The same trade happens as yesterday on Wednesday. We have a high of the day, high of the session sell. And we have our universal trade criteria met when we have this engulfing candle, aka the death candle, and we wait for that same pin bar to enter in. Again, these setups are repeatable, reproducible, and scalable in size. Now, we have our 20 pip stop loss above the high of the day, and an immediate blow-off move that nets us another 50 pips. Consequently, if you put it towards the structure right here, you get about 38 pips, or you can lock in 25 pips immediately and close the screen. Whatever your trading goals are. But as you can see, we go on for another 120 pips. So I will really emphasize, if you're new to this type of trading style, to secure partials at 25 to 50 pips, set your stops to break even, and let your runners run. So looking at this move, Thursday closes as a red day as well. It's just been a week of red days so far. Now moving on to Friday, where we look to secure more free cash. We see that the opening price on Friday, we have a bullish trend during Asia, inside in the gap time, an even tighter range for London. We revisit and break past Asia's high, putting in a peak formation high in the gap time. And we mark off this level. We come back down into the NY Forex Open to create a new low of the day. And note that this is NYSE Open. And see how price behaves right before the open. They pump it up, retrace, pump up to the high of the day, pin Tuesday's low, and we engulf the previous candle 15 minutes before the third hour. Just like the trades before, we have a entry right here at the pin. So we can have a stop loss right above the high of the day, 20 pip stop loss. And we have another confluence. We have a double top form. So we're entering off of that. And you can see that we immediately blow off for another 25 pips. Consequently, if you did not enter in the market for this, we had another entry. Once we blow off, we have 1 push, 2 push, 3 push pattern. And then we have an entry right here. Higher stop loss for a 25 pip move. 25 pip plus. And that was Friday's trade. So that was the weekend review. I would say if you're interested in learning this style of trading, I can put out more videos and go a little bit more in depth. And if there are any other pairs, I trade not only gold, but Dow Jones, NASDAQ, the British pound crosses, Japanese yen crosses, and the major US pairs as well. So leave a comment, and if you like the indicator too, I can have a link in the description below.